forward to. So far, we have listened to a lot of startup founders, a few of investors, but this is a panel where we're speaking to a lot of speakers, which are investors. We have angel investor, we have VCs, we have somebody who is working into the debt space. We also saw the big announcement coming in, Caspian Debt and BlackSoil also. We'll talk deeper into that. But starting with what has happened last year and what we are seeing in 2024. In 2023, that was a year very harsh that left startups craving, starving for funding. It was expected in end of 2023 that the environment will get better in the second half of 2024. We have seen the rise in VC funding that has happened in startups in India, 42% rise in Jan to July when we compare it with the last year. And also, there is a trend that says there is a consistent or let's say a muted or a flat growth when we see at early stage startup investing. But there is a rise in growth stage capital. Now, given this background, the reason why I'm saying all of this or sharing all of this is I want to understand in your opening remarks, panelists, how are you reading these developments? And more so, stress upon how have things changed in 2024. We all know that 2023 year was a very hard one. We have seen the funding crunch, funding winter. We have seen many thousands of startups shut down. What's happening in 2024? And also, in short question, is the funding winter gone away? Or are we now in summer, now in spring? Priyanka, lady on the panel, we start with you.
Hi,
how are you reading these developments? In your view, how has the approach of investment, given the trend that we are seeing a mature approach from entrepreneurs and founders lens as well towards funding, and of course investors are more meticulous, more vigilant in terms of giving valuations, in terms of giving funding. How are you reading these developments? And as expected, that things will be better in the second half. Is that the thing that's happening right now?
Hi, good afternoon, everyone. Thanks for that. I think it's very important to understand the context within which this question is being placed, right? So the so-called funding winter was preceded by a funding bonanza that all of us, of course, partook of, and which was a reaction to a black swan event, which was the COVID-19 situation. Right? So if you look at it, COVID-19 happened, the whole kind of world shut down for a few years. Then came exuberance, right, when funding shot up. Arguably, valuations were irrational at that point. And then came a reaction to that, which was a so-called funding winter. And now here we are today. So if you were to take kind of the black swan events out of the system, I think where we are now is a return to normality, right? And what we're also seeing is a return to rationality. So the overblown numbers that in terms of money being given or the valuations being given, that is now a thing of the past. The expectation that kind of entrepreneurs may have had that, hey, on the back of an envelope, I'm just going to raise a crazy amount of money, that is definitely a thing of the past now. And even for investors, I think when I put my investors hat on, we are looking at entrepreneurs and Kalaari Capital, we are an early stage fund. We're looking for entrepreneurs who can build interesting, innovative, tech-led ideas that can scale, but they can do so in a responsible fashion, and they can do so with a view to building for the future.
Two things there. One, you talked about valuation, and of course, we have seen inflated valuation, and hence the governance ruckus happened. Two things. So we'll talk deeper into how you founder and investor both can look into governance. And second point there, you mentioned about early stage startups. What's happening there? We'll come back to you. Now I'm coming to you, Ankur. How are you seeing the developments? And also with that, when we say that we are going back to normalcy, we are now least expected to see the number of unicorns we have seen in 2022. Would you agree that we are seeing the startup buzz, so-called, going away from India?
So yeah, no, startup buzz is not going anywhere. I think there is still a lot of excitement in the serious players that are on in the business. So my background was in the public markets when I started my career. So what we are seeing today is like a very different era where public markets are way ahead on fundamentals and private markets are extremely reasonable. So what we have started seeing is many of the large family offices taking a larger bets now in the private markets because they are seeing this is an opportunity for them to hedge the valuation bet. And of course, the interest now has come back in the growth stage because a lot of the last 2 years, the entire situation of the GMV and revenue being the only metric that people focused on. And now suddenly consumer VCs come to me and talk to me about EBITDA and they talk to me about debt EBITDA. So those things have not normal. That has become the new normal. That okay, debt should be taken for cash flow servicing and all of those things. Never, because balance sheet was never a concept for most of the VCs, right? So, but those things have changed. So these are the good developments that have happened. And we hope that remains in the future because as lenders, we like to see a lot more, I would say, cautious optimism in the businesses that are being built out with growth. But ultimately, the action is now going on the side of growth again. People have fixed their businesses, and those who have not been able to fix their businesses are again anyway struggling. So it's still a large portfolio out there. There is still a lot of companies that need to correct either on the valuations, business model corrections and burn corrections have happened. Today, very rarely we see businesses which have high burn in nature and want to continue that way. Or at least the path to profitability is a lot more tangible. So back in the day, three years ago, it used to be a slide back in the annexure in FY28 or FY29 EBITDA break-even. Now it is the front page thing. So they start with EBITDA break-even. Even in an early stage company, they talk about that. So that is the buzzword. Startup funding has been replaced by that.
I can see the agreement with what Priyanka said. We'll come back to you in the second round talking about what's the size of AUM you're looking at collectively when you talked about the merger 2 days ago. Coming to you, Ashish, he talked about how domestic capital focusing. I mean, I want to focus on domestic capital. What would be your advice? There are reports that says 85% of capital that have been invested in startups have come from foreign. And this is the number data which kind of disheartens me because we know that India as a country has a lot of dry powder, right? Categorized into micro VCs, VCs, angel investors, family offices, AIFs, many other. What would be your advice, your suggestion to the ecosystem? How can we see much more movement for domestic capital? What would you say?
I think the movement has already started, right? If you look at the total money that the VCs have raised in the last maybe 2-3 years, the ratio of new capital, domestic capital in the VCs have actually increased significantly as compared to what it was, let's say, maybe 5 years prior to that. So I think that movement is happening. And I'll say maybe there are 2 or 3 things that are happening which is kind of contributing to that. Number one, which is in general, Indian family offices, Indian institutions are more familiar with the concept of startups better. You know, they have seen some wealth being created. So there is just general more awareness there. The second thing that is kind of happening, and some of this was in work that some people were aware of, right, which is kind of parity between, let's say, the capital gain tax between, let's say, the private market and the public market, right? So while the announcement happened now, but I think some of us, we had some sense of that this was basically a matter of time before this could happen, right? And why this is important is that if you look at, let's say, large domestic foreign capital, they do allocation first, and then, you know, between public and private, and then they choose who the managers are. Whereas if you look at typically India, they will basically choose where am I gonna get the best return on my capital, and then they will look at allocation. So which is why this change in the taxation is probably does not have so much implication to the overseas capital, but this will have significant more implication to the domestic capital. But I think why this was 85%, I will not necessarily be very disheartened. In fact, I would anticipate this number to, in terms of the absolute number, to be high, primarily because if you look at the venture ecosystem in India, technology ecosystem in India, truly started maybe 15 years back or so. And this is at that point of time, the kind of companies that we used to create in technology world and in public market, right, were very different. They're very big decoupling, right? And this was largely inspired, impressed, and influenced by what was happening, let's say, in the West, right? US, Canada, so on and so forth, right? Now, it's very natural, and the managers were also people who really had studied there, had seen ecosystem there, and they came back, and they were actually trying to do that. So it's very natural for them to fund those businesses which looked like an American company, right? We kind of learned over a period of time that that's not maybe how exactly it will work. So there is Indianization of that is starting to happen. You know, if you look at many of the companies which have started in the last 3, 4, 5 years, and we can probably talk about examples over a period of time here, is that I don't think you will be able to find equivalents of those in the US or Canada or Europe anymore, right? So I think a lot of that has started to happen. I think, you know, my sense is that next 5 years, if the last 5 years the number was 85%, my sense is this number will probably drop to 70 to 75% with the total market actually going up.
Can you give a wild number to how much dry powder do we have in India in terms of capital?
I don't have the numbers, you know, first-hand information, but I think if you look at the total VC capital, my guess will be truly capital that has to be deployed in the next 2 to 3 years should be close to $40 to $50 billion from the VC side.
That's huge. That's aspirational. Let's see. Coming to you, Shiva, he mentioned about, the conversation we heard about valuations. Now, in 2022, we have seen the largest amount of unicorns, right? In 2024, so far, we have 5. How are we looking at this? We know that there has been a market correction in the last year, but are we not seeing unicorns anymore in this year? And second part of this, if you were to give a milestone, place a milestone to replace the unicorn, which is more realistic, which is as Ankur said, more on the face of it, keeping profitability on the first page, EBITDA on the first page, what would it be, and what metrics for that?
So I'm not going to comment how many incremental we're going to have priced in, but I think the targets for the industry should be, you're seeing the compounding from current basis of where you are. Like Priyanka also called out, 2021 was this anomaly for what you saw as number of companies and the quantum of capital that was there. We are in a good base to be building on. India has a very strong foundation of capital flowing in globally for the reasons that the other panelists have also called out. So we will definitely be growing and compounding from here, and that should be the aspiration of saying whether you get to the specific valuation of $1 billion, I think that's less significant because that's anyways a private valuation. Currently, based on how public markets seem, they seem more flexible to look at models that they were waiting on earlier as well. So if those companies end up going and get that valuation in the public market, that is absolutely no harm in it. It's actually a positive thing for the industry. So it's a question of saying how many companies we get that kind of continue to compound into here. And I don't think we need to worry about whether we refocus it on a revenue base. That's a flexible way that we look at it. But it's even if we're looking at the unicorn metric, it's 5 and we have to compound from here. The anomaly of what 2021 numbers were, I don't think should be something that we're factoring in our math.
That's well explained, but I'm still looking for a milestone that you would give out. Milestone or a metric that one startup or a founder should look at?
The startup should be building for, I think what Ankur said was right. You need to build so that how you're building for long-term profitability to compound in the business. That's the way to think about it, and that's how even from an early stage, we are trying to engage and understand from the founders of, as we are looking at it, it's not about saying, can you get from our side being a seed, Series A, pre-Series A investor, will you be able to get a Series A, Series B? It is, are you being able to see these long-term trajectories play out? What is the proof point you need to get to by which this funding can really get you to from a deep tech base? Because there, you may still need incremental capital. You can't get to profitability because there's a significant product development side. But once you get to that proof point, is it clear that what the long-term business model you're building for is? And as long as that's something that can compound for decades, you will see yourself building in a very strong base.
He's still being on the safer side. I appreciate. Ankur couldn't stop. Ankur, you would like to add to it?
See, I think it's a very tricky question to answer for the reason that no size fits all, right? But I'll tell you what I have seen in the ecosystem. There are 2 types of kind of entrepreneurs, right? So one is, who basically have a let's say, more secular risk-reward appetite, right? So they do not want to take a Boolean risk, because ultimately in a business, what happens in a startup, you could work for 10 years and then figure out that, hey, you could either be a billionaire or you could basically effectively have nothing, right? So I think from that perspective, if you, and both are a great businesses, right? As a venture capital, I definitely would want a lot of people actually to take that Boolean risk, because these companies create very, very large value in case they succeed, right? Which is great for people like me. But if you are, let's say, in the second category, which is in a more secular risk reward, I would say that optimize for profitability in a 5 year of, existence, right? So you raise maybe 1 or 2 rounds and then get into a stage where you effectively manage growth with both private and public capital. That's basically one way to think about it. The second is, and which is when, like what Ankur is talking about, think about debt, venture debt, think about other, types of capital. But when you're looking at, let's say, the first category, which is like really very, very large businesses, I will say just optimize on 2 things. Number one, strength of value proposition, and second is market share, right? If you have to continue doing that, right? I can tell you that there will always be investors who will effectively back you, right? Because as long as they see that you could become very, 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 very large, there are bets that, and there are hundreds of millions of dollars of bets that one has to be taken.
Perfect. Well explained. I mean, I was looking for this. So, yeah, Ashish made up for you. Now, I'm coming to you, Vikas. Tell me, how do you look at the phenomena when people say that too much easy capital in early stage would harm the trajectory of growth for early stage startups? And the second part of it, how are you looking at some of the sectors that are expected great growth in coming 2 years, or let's say 12 months?
So I'll just add up to first earlier 2 questions. I have some data just to add out. So people talk about India and all the money. Let's understand, first 50 years we were a cash economy. There was hardly any investments happening in equity. If you talk to my father कि mutual fund में पैसा डाला, हमारी life में कोई mutual fund नहीं आज तक. In that sense, and that's how India has grown up. And we keep comparing with US and Europe. That's a very different shift that we have done. Government has been trying for 10 years. Mutual fund सही है. कितने लोग का mutual fund है? It's 3.5% of Indian population. Against the average median of 30% worldwide.
Just to add to it, we have come this far that we are seeing startup IPOs happening and a lot of people investing into that. So we'll cover that bit with Priyanka too.
Yeah, I'm worried on that with the motorcycle case happening over subscribers. That's a different story.
Altogether.
But first understand, I'm a great proponent of India growth story. There's a lot of FOMO happening worldwide. But when it comes to investor, the peak is still 3.5% of economy that's investing in an asset mutual fund which is as small as 500 rupees. And that makes me believe there's a lot of parity to reach from that to 30%. And whatever people invest there, only 1% of that always ends up investing in startup. Let's be very clear to that. पूरे इंडिया में कितना इन्वेस्टर होगा स्टार्टअप में? I am not able to add more than 2 lakh people, to be fair, who may be LPs or who may be angels. Only 2 lakh in a population of 140 crore.
How much more do we need?
How much more we do need? 1000x. That's the minima. And when we talk about future, when we talk about competition, I say that market creation का time है. 10 साल सब लोग लग जाओ. Market create करते रहो. अभी competition कहाँ पे आ गया? मतलब अभी तो पैसे की इतनी requirement है. So that's one thing I just want to put as a way forward where I'm very, very positive for India as a growth story. Secondly, when we talk winter, and I would like to connect to Ashish on his thoughts, and he's right. Winter is not about lack of money with investors. जो कमा रहा है वो तो कमा ही रहा है, उसको invest करना है. Just that which asset class you want to invest in. My own portfolio in PMS gave me a 90% return annualized on last quarter. And as a VC fund, we are committing हम 24 से 30% देंगे, ये देंगे. Bullshit, no investor is ready to invest in any of the VCs or any of the startup, simply because other asset class is doing good. So it's not about lack of money. It's about which asset class I want to get into. And anytime winter comes, there's a lot of money that used to come from Dubai or Singapore or even Japan. They just seize it because it divests into some other asset class. कमाने वाले की कमाई नहीं कम हो जाती, पैसे वाले का पैसे नहीं कम हो जाता. They just define. So that's how I see winter. Today, India has a great winter for VC funds, I would say, because equity is doing bullishly well for the last 5 years. And I worry all the Gen Z kids who have started investing since 2019, post-COVID and all that, उन्होंने तो कोई drop ही नहीं देखा हुआ. उन्हें यही नहीं पता market correction कब होती है. One single day of exit poll and Modi and all that happened, and people were all over the place कि पता नहीं क्या हो गया. So that worries me, and that also excites me as an opportunity. So yes, these are 2 top numbers if I talk in that sense. Your second question was which industries I look
Sectors,
forward
yeah.
to? I'm bullish about health, education and defense. These are the sectors जहाँ Indians सबसे ज़्यादा पैसे खर्चते हैं. Investors VC करे या नहीं करे. पैसा होगा.
Are you sure about the edtech?
I'm not sure about edtech, I'm sure about education. It will come from edtech or it will come from manual, it will come from किताबें छाप के होगा. I don't know what way it happens. कोविड में सिर्फ मोबाइल फ़ोन इसलिए बिके क्योंकि बच्चों को पढ़ाना था. मोबाइल फ़ोन को वीडियो गेम्स के लिए नहीं लिया. You keep reading stories from a रिक्शा वाले ने अपने 5,000 के लिए and all that. And if you see last 10 years, thanks to a Jio giving almost free internet, thanks to smartphones, everybody has even at a 5,000 rupee, which is not even $100 at price point which we are sitting. I think that has boosted a lot in terms of where education goes. So I'm coming back from education, but these three sectors, perennially खर्च होना इस पे, growth होती जाएगी. अभी कितने लोग इंडिया में पोस्ट ग्रेजुएशन ही करते हैं? 0.5% of population if I can add up. अभी तो tip of the tail पे बैठे हुए हैं, and that's still better than US by the way, even on those numbers. बहुत कुछ पढ़ा है. If somebody goes into primary education, somebody goes into non-CBSE education, you will start covering 80% India, and that's a lot of info. So a lot of headway. I'm not a great proponent, sorry personally, AI से क्या होने वाला है, ये क्या? These are enablers. These are not industry, these are not sector. जैसे हर आदमी Excel यूज़ करता है, जैसे हर आदमी कैलकुलेटर यूज़ करता है, हर आदमी कंप्यूटर, हर आदमी यही करेगा. That's a tool. In which sectors? For me, it's defense, education, and health, which is a perennial requirement.
Great, great. Priyanka, I'm coming to you. Now, tell me how you're looking India's growth story when we talk about IPOs. We have seen many startup IPOs coming in. We also seen some muted response. Why has that happened? One. Point number two is this appetite for IPO for startups healthy? How are you looking at this? What would be the long-term impact?
See, firstly, thank the Lord that IPOs are coming. You know, for the longest time, and the venture industry is, Kalaari is 16 years old. We were one of the first funds that started when money came back from the US after having successfully exited two of our companies. For the first half of it, I mean, IPOs used to be that shiny, magical thing, jo kabhi hoega, right? We had seen the Make My Trip IPO, and Deep Kalar was and is God because he had actually done it successfully, and that too in the US. And when I was an early stage founder, I don't even think my initial decks even had that dream ki hum IPO karenge, right? These days, I mean, entrepreneurs flip the word IPO out, jaise, change hota hai, which is amazing, right? Which is only happening because they've seen IPOs happen. And I take your point, some work, some don't work. That is the market, right? But I think for in the venture capital industry, in the private equity industry, I mean, of course, being able to see exits for LPs, that's a great sign, right? So that is there. IPOs are a good thing. They unlock capital. They give liquidity to investors and to the entrepreneur. Now, I think what we'll see is companies are beginning to recognize what is the makings of a good IPO, what are the fundamentals and the practices you need to put in advance while you're entering the IPO process. I think that process is getting more and more clear to entrepreneurs. And folks are looking really long ahead. Like this is 3-year prep at least that you get into when you are even considering the fact of an IPO. All of these are very healthy mechanics and signs that are happening to the industry. It's a sign of an industry coming of age. And just to your point about sectors, like India is kind of looking at deep tech in a very serious way. Like when was there a time when entrepreneurs could convincingly say that I'm going to build a deep tech company? Chara was here, right? In space, all of those. So the exciting sectors that are coming up. And again, to the previous point, we're just not aping the West. There are new business models that are coming up. And there's this, muscular, robust conviction in the entrepreneur that they will take those big, bold bets. The audacious entrepreneur is here. I think which is fantastic for all of us. And I know there was some good-natured discussion on the word unicorn as well. So I thought unicorn is it's a private valuation. It was, again, that golden thing that we as entrepreneurs would want to ape to. Oh, my God, I'm the entrepreneur of $1 billion company. All of us, that was like that mark in the sand that you basically wanted to come to. But the entrepreneurs that we see today are a lot more, the good ones are a lot more based on fundamentals. They're looking to build for the long term. And I genuinely feel that those are the entrepreneurs who will get funded.
Good one. I just want to quickly come to Ankur and Shiva. We're seeing not only the rise in the number of investments into startups, but also healthy number of investors exit. Vikas also mentioned about it. How are you looking at this development? Would you by any chance say that this will create some challenge when we're seeing funding winter as well? I mean, given the challenge crunch of funding, the time stamp between the funding rounds is getting shrink. We have also, as per many reports, we've also seen the rise in bridge rounds. I mean, startups which weren't able to take up the primary rounds. How are you seeing this development? What would you say how healthy it is for investors, or more so for angel investors? VC investors also, this movement is for exits.
You're talking about taking exits or doing more bridge rounds?
No, I am talking about making exit. Yeah.
The early stage investors exiting.
Yes.
Early.
Yes.
So let's see, it all depends upon ultimately, money in the bank. So unfortunately for us, we are cash flow guys. So you can be very greedy in equity, but as lenders, we understand cash in the bank. So many times we have to take a call on exit on the basis of valuations, right, and the prospects. So exits are critical because you want to prove to your LPs and your investors that money actually comes back from this asset class. So this is what private equity industry today has been showing for the last 12, 18 months. It took a long time. Private equity industry in India started back in 2004, 2005. But now back in every day there is a block happening, hundreds of millions of dollars being sold by them, because that exit shows from this country exits happen. India has a record, not a record, I would say it's been labeled that we are able to give exits to LPs. So now with this, it gives a good perspective, whether you are early stage investor or whether you're late stage investor, whether you're a lender or not. Cash in the bank for the LPs are very important. That's what the new term DPI has become more important than IRR. So that's where we have started seeing more action happening on for all kinds of portfolio
Before
companies.
Shiva could add to this, I would want to know from you, how much are you looking at to deploy in startups in coming 2 years?
We have actually increased our pace, so we will be deploying more. See, I think, Resham, a lot of things are being talked about IPOs, and there are questions around it, and they're all valid questions, but you have to understand that as a venture investor, we are in a business where there are very few moments to celebrate, to the extent that, when we make an investment, there is a big
That's
peak.
even more challenging in deep tech sector.
I think in deep tech, we are probably at a critical mass now. Maybe last 7 years has been a time of struggle, but like what Priyanka was saying, this is the time, I think, when there's an inflection point. So we are more of an early growth stage investor, right? We actually, if you had asked me this question 2 years back, I probably would have said, kahan hai deep tech, right? But now, at least every week there will be 2 or 3 companies that I will look at it and say it is worth my time to at least start looking at it. The point I'm trying to make here is that and not only me, right? So what really has happened, because public markets have been exuberant, there has been DNA change in companies where people are saying that I will look for cash flow positivity and so on and so forth, right? People look at IPO as an exit path sooner than effectively later. I think in general, people are a lot more bullish in the private market to say that we will deploy more. So see, I like this analogy with seasons, whether it's winter or summer, right? If you look at when there is winter in Delhi, there is summer in Australia, right? So typically what happens, though, in the broader technology market, it feels that there was winter in 2022-23, right? Which probably we are in a spring season at this point of time. But if you look at, as an example, AI, right? And by the way, I am a fan of AI, right? So I think it is an industry in itself, right? So AI, I think there is absolute summer there. Whereas if you look at EdTech as an example, there is probably winter there. So I don't think it is the fact is that there will always be winter in some industry, there will be summer in industry, and that's how the ecosystem really thrives.
Good one. That's all right. We can have 20 seconds. Ankur, you want to give us the size of the capital?
So we've been deploying close to 700 crores every year. And we're growing 25-30% year on year. So there's no specific targets. As a good quality pipeline keeps coming in, I think we are able to sort of figure out the capital.
And this is the cumulative number, right?
Yeah, every year on year we've been able to deploy. So just not, generally I think quality transactions are not really challenging now. It's just actually the volume for us has grown 2 to 3x. more and more people have realized that debt cannot be ignored, and they want to sort of start using it very, very actively in their entire business models.
So we are seeing interesting times definitely. Shiva, your part.
Yeah, no, so I just wanted to add that I think we've talked a lot about the IPO market, but one thing that's important to also factor in as you're looking, especially when, since we've had part of the conversation on the deep tech area, it's not one that globally is an IPO market. It is one where your business evolves in one of two ways. You either say you become a industry where you're building out a technology that is a very core platform that larger technology companies will absorb, and there's an M&A route that you're going to go through. Or you may end up going to be an industrial company, which then eventually has its own kind of journey, which may include an IPO, but it's the less frequent one in that entire ecosystem. For us as India, be it in the deep tech or the digital domains, the acquisitions when it comes to the M&A by cash, because that is what will deliver the DPI, has still been a fairly limited sum happening from either the large industries, whether you think about it from the Tatas, the Mahindras, etc., saying they put out cash to acquire a significant chunk and a significant chunk of cash for a company, or if you look at saying companies that are building in the deep tech domain. So I think that's the part of the business model and the ecosystem that still has not matured enough. And if you're looking at where the next 5-7 years, if that starts to mature, that will cause the next part of the compounding that we haven't really seen yet in the Indian ecosystem.
That's what I'm saying. These are the interesting times. You would like to add to this? And also in the second bit of it, something on governance. What would be your one advice? I mean, we have seen some cases in the news, big headlines. What's lacking? What's actually lacking? What startup founders needs to focus on?
Yeah, again, you mentioned early stage investors getting out here. I mean, a lot of it is to do with the life cycle of a fund and the individual funds economics as well, right? So
How investors can help in that?
So, I mean, really depends, right? If secondary, primary, all of that it's a normal thing that happens. So again, early stage investors getting out is the way that the business works actually, and they're supposed to get out at a certain time. You were asking about governance. So I think, now that as an industry, the venture capital industry is coming of age, and the government also is looking decently proactively as how this industry is run and managed. I think we'll start to see some positive kind of pushes from the government as well, where corporate governance actually becomes a big thing. I think there's a lot of training that's going to be going around. There'll be a lot of initiatives by the government to make sure that companies are kind of acting in a responsible fashion, getting more and more independent directors on board, ensuring that the board acts as a good oversight body and not just rubber stamping whatever the company wishes to do. So I think all of those are, again, I mean, they're growing pains that the industry is facing, and we will start to see all these corrections happening. We're seeing a lot of great examples of companies being extremely responsible in how they're building and scaling. So they're both they're two parts of the example, right? And we're seeing it happen, and I think it's a growing pain, and we will start seeing corrections in this very, very soon. And I think as entrepreneurs and as investors, we welcome all these changes that are going to happen.
Interesting. Because your take, how are you seeing this ecosystem evolve? If I can push you, make 3 predictions. In next 5 years, how will it change?
The monkeys on my back of predictions. So the latest AI I read just today is called Dubai. DUBI. So that's how things are now getting sold. And I also heard they want us off the radar now.
That's not me. We'll stay back.
And I also heard Elon Musk registered a domain called x.ai, and the shares are available at $19 billion now. So that's how I see things. Just going for the future, my industry remains same, though I'm very well with the panel. AI will boom a lot of things out there. There's a lot of scope in terms of increment. Deep tech is the way. My 3 areas still remains where the money is: health, defense, education, and there. At least in India, that's where 85% money is going to spend out there.
Perfect. One quick question to each. It's just 2 seconds. If you were to put in a check in early stage startup, which is not now, I mean, one of the big startups right now, and you would have made a check, what was that one startup? In 3 years initial time, what would be one startup you would choose?
Anything that generates huge employment.
That's being on the safer side. I need a name of a startup you would have loved to invest in the earlier stage.
Any startup which is already big now
Yeah,
that I would have
yeah,
wanted to
yeah.
invest.
You're
I think
getting
so.
it right.
That answer is very clear, right? Zepto is the answer, right?
Interesting, interesting. Ankur?
So for us, the B2B value chains and seeing what Zetworks and stuff have developed, I think that's
Shiva,
been
always
fascinating.
being on the safer side. I need the name. Come on.
I said B2B value chains and Zetworks. I've named companies.
I mean, do you really want me to answer that question?
Is that even a question again?
So any app which I use, so possibly something like WhatsApp, which has 6 billion.
Interesting,
people,
very
right?
interesting.
Also.
Thank you so much, panelists, for making time for this. I really enjoyed the conversation. This has been really insightful. Thank you so much for being such a good audience too. Thank you.